Hello, welcome back to Sabi Market Channel. It's amazing to have you here again. Um, okay, so today's videos we'll be covering Access Bank Holding PLC return on assets from 2014 to 2023. But before we start talking about this beautiful chart you're seeing here, let's take a look at what the data that generated this chart looks like and how were we able to derive these percentages. And before we eventually talk about what they are communicating, what they mean for this particular bank. So for a quick review, Access Bank is actually a Nigerian bank, an African bank as well, and it's actually one of the top banks in the banking industry. And we are taking a look at what their return on assets actually looks like in the last 10 years. So to generate the return on assets and to generate the return on assets, which is a financial metric, a ratio, we just obtain the total assets from their financial statements and also the net income. So the net income is the profit they get to keep after all expenses has been accounted for, and the total aspect is how much the total asset is how much has gone into their assets for that particular year. And so we imputed this for the space of 10 years. So for example, for 2014 they had, this is about 2 trillion in assets as at 2014, and then in 2023 this is 26 trillion in assets. So and in correspondence to that, they have 619 billion naira in net income for year 2023. So it's just the corresponding years, their total asset for that year, and then their net income for that year. So we're checking how much are they able to generate earnings through this asset. So let me give a brief about what's the return on asset actually mean before we start dissecting these numbers that you see on your screen. So the return on assets ratio is actually a financial metric that measures a company's profitability in relation to its total assets. So it indicates how efficiently a company uses its assets to generate earnings. So to get this metric here, so we see that for 2014 it was 1.9%, for 2015 2.54, and then for 2020 it's 2.32. So to obtain this value, we just simply divide the net income by the total assets, and then we get this percentage. So that's how we did this for the whole 10 years. So just divide the net income by the total assets, and then you get the return on assets. And so that's how we arrived at this beautiful chart that you see here on your screen. So generally the return on assets, for a ratio above 10%, it indicates that the company is generating strong profit from its assets. Now 5 to 10% is considered moderate, and then an ROA of less than 5% is considered low, which suggests that a company is struggling to generate profit from its assets, potentially indicating that there are inefficiencies in asset utilization, or there is existence of poor management in that particular company. But then there are some factors that can affect return on assets. So factors like asset utilization can affect. So if there is efficient use of assets, it can actually contribute to higher return on assets. So it contributes to profitability, Now, high net income can lead to higher return on assets than asset base. So a small asset base can result in higher return on assets. So if profitability happens to remain constant over the period, so industry can also determine that, then growth stage can also determine that. So, but then if we take a look at, for return on assets, it's actually industry specific. So I'm going to narrow it down to what's a proper return on asset for the banking industry, the financial industry, is supposed to look like. So on an average, the banking industry, it actually varies though on factors like geographic region, bank size, and business model. However, so whatever it is here, they actually vary. So the global average for return on assets for bank is around 1% to 1.5. In contrast to what I mentioned earlier, that 10% is actually high, then 5 to 10% is medium, and then 5%, below 5%, is actually considered low. But here now in the banking industry, the global average is 1% to 1.5%. So that is all that. Now, if we now narrow it down to Nigeria, so for Nigeria, the average return on assets is generally low compared to global and regional benchmarks. So according to various reports and analysis, average return on asset for Nigerian banks is actually around 0.5% to 1%, and that information is given by the Nigeria Stock Exchange around 2020. So we also have the tier 1 banks, which are actually ranging from 1% to 2%, the tier 2 bank, which are mid-sized bank, 0.5 to 1.5%, and the tier 3 bank, which are smaller banks, which is 0.2 to 1%. So now we'll consider Zenith Access Bank as a tier 1 bank, which their average is supposed to range from 1% to 2%, because Access Bank is actually a very big baller in the game. So let me use that word for them. So now let's analyze what their values are like. So I've established a metric for them, the average metric for the ROA for Nigerian bank. For a large bank like Access, the average is 1% to 2%. Now let's see, based on this metric, based on the established average for Nigerian large banks, let's see how well Access Bank is generating income from their assets. So now in 2014, they had 1.9, which is within the range of 1 to 2%, and that is actually saying that they are actually generating profit from their assets. And in 2015, they happened to do better, which we can see here is 2.54%. So if we observe very well, we see that they are actually they're actually within the range of 1% and 2%, except in 2020, where they came very low. I believe that the COVID-19 actually affected what they generated, and then we could see the aftermath of the COVID-19 on the 2021 metric, and also even the 2022. I think the 2022 return on assets was the lowest they've experienced in the space of 10 years. And then we could see how their operational efficiency here, how they spiked up in their return on assets from 2022 to 2023. This is over 100% increase, and this is actually okay. The highest they got was in 2015, and then the closest to it is 2023, and this is actually very significant. It even exceeds the benchmark for the tier 1 banks in Nigeria. So we could see that from this chart, we can conclude that Access Bank is generating a good profit from their assets. So it shows that they have efficient management, they are efficiently managing their assets, and they are generating reasonable profit from it, because most of the time they've never gone below the benchmark of 1% to 2%. The least they got was 1.02, which is still within that benchmark. So from this chart, we could conclude that Access Bank is doing really well when it comes to generating profit from their assets. So the return on assets is a very good place to look at, a very good metric to look at when evaluating the financial health of a company. And in the case of Access Bank Holding, we have seen that it is very good. Not all companies will show this amazing move through the year. Some would have taken a downturn and funny stuff like that. But then Access Bank is a big player in the game, and I'm sure that they play their game really well when it comes to management and all of that. So that is just that. This is a brief video, and we actually come to the end of this analysis on return on assets for Access Bank for the space of 10 years. So if there is any comments you have, kindly drop it in the comment section, and do well to hit the like button, and also kindly subscribe to the channel. And that will be all, and then until we see again, thank you very much. Bye bye.